I'm Craig Balster with Keller Williams Excel. This is Zach Appleby with Equitable Mortgage. Today we're going to continue our video series on how to sell a house and buy a new one in the same process. I should say buy a house and then sell your new one or your old one. Zach has helped us with many clients over the years, and he's nice enough to spend some time with us today. Today we're going to focus on how to use your equity in order to either purchase the next house or use it towards a down payment. We do this quite often with clients, and Zach's been a real help and a real lifesaver in many instances. So let's start with the first. What is a bridge loan?
So a bridge loan is a perfect way to access the equity in your current home before purchasing your new home. Very difficult market today, looking at home sale contingencies. You don't want to put your house on the market, sell it out from underneath you, and not have a place to go in the future. So that bridge loan is a perfect solution to access up to 90% of your home's equity in your current home, put that for down payment, closing cost into your new home, really purchase that next home with no money out of pocket, and pay it off when you sell your existing home.
Cool. So how does the timing of that roll out? When do you close a bridge loan and those kinds of things?
So getting pre-approved for your new purchase, your bridge loan is going to go right along with that. That's going to be an option. We're going to express, hey, you have this equity in your current home. Let's kind of utilize that for your new purchase. You close the bridge loan a few days prior to purchasing your new home. That gives you the access to that amount. We wire that directly to the title company on your behalf. Just like a new mortgage payment, you would skip the next full month. So hypothetically, if we had a property close here in February, their first payment on their new house would be April 1st, and the bridge loan would be April 1st as well. So if the current home is not sold prior to that first payment, you're going to have an interest-only payment, so keeping that payment as low as possible, an interest-only payment on the bridge loan and your new home starting that second month.
And the whole reason you're using a bridge loan is usually so you can buy the new house without selling your new one, because the market is so tight that selling isn't the hard part, the buying is the hard part. So, Zach, what are some common mistakes or things to avoid when you're using a bridge loan?
So definitely plan ahead. It's a tool that you want to have it put together, approved. So when you do find that new home, it's there, it's ready. In mortgage lending, planning ahead, you can never start soon enough, whether that be just a simple pre-approval or, putting the works together for a bridge loan so you can access that equity. And then understanding the terms of the bridge loans. There are a few lenders that have bridge loan products. They all work a little bit differently. Some eliminate the current housing payment. Some have interest built in. So kind of knowing what's right for you is really kind of what you qualify for. But understanding kind of where you're going to get the equity from, how it's paid off, things like that is important to consider when evaluating your options. Pretty tough.
So when using a bridge loan, what are some of the things when you meet with somebody for the first time? What kind of information do you ask them?
So planning ahead on the bridge loan is just a very valuable resource. Looking at that equity, what can you qualify with the home sale contingency or with both homes? So using that as a planning tool, see what equity is available in the home and what that can do on a new purchase.
Well, cool. What are some of the fees that come along with the bridge loan?
So the bridge loan fee, there are some closing costs. There's no appraisal. We streamline that process. It is a process that kind of just gets added on to your existing mortgage application for the future purchase. Depending on if the home is listed, credit scores and things like that, the bridge loan closing costs range from $495 to $695. So it's pretty nominal fee to access that equity. There is recording charges and title company fees and things like that. But all in, at most $695 to purchase a bridge loan.
Oh, that's great. That's great. And especially in this market, the real key point, we talked on it before, is when you're offering on the next house, you're not offering contingent on your current sale, and you can take your time shopping for the new house. That way, if you get in contract and then it doesn't complete, you're
Mhm.
not homeless.
Yeah.
that would be a bad thing.
Yeah, the good thing about the bridge loan is you can, apply for that and kind of keep that in your back pocket. I have some clients that apply for a bridge loan and we're ready to close, and that home sale contingency may not be a factor where they may say, hey, we want to buy this house and sell our house, but just in case our house doesn't sell,
Right.
we can't access that equity, let's have this bridge loan in place so we can use that. So it's one of the tools. It's a great tool to have and not need it.
Yeah, I think we had a client do that very thing with you last
Mhm.
year. So very, very good. Well, again, thank you for coming in. I know it was a brief time, but
That's all right.
I know it's information that many home sellers and buyers, or buyers to be in this market, have been looking for, and they get so stuck in, well, how do I don't want to sell my house, and then where do I go? They just don't know. So
Yep.
this is a way you can buy one and then sell your old one, and it's a nice, smooth process.
All right.
Thanks for being here, Zach.
Thanks for having me.
All right.